Welcome to America's Commercial Real Estate Show, your source for market intelligence, forecasts, and success strategies. Hello, I'm Michael Bull. Thank you for being with us. This segment is brought to you by CommercialAgentSuccess.com. Check it out. It's the ultimate in commercial real estate broker training at CommercialAgentSuccess.com. Well, we have a wonderful show today for you, and we do this show once a year. We've done it for a long time, and I always look forward to it. We're going to cover the top 10 issues affecting real estate. And this is a report that's put out by the Counselors of Real Estate. And the Counselors of Real Estate are an incredible group of people around the world who are experts in commercial real estate. They come from every discipline. It's an invitation-only group of people. And you know a bunch of CRE counselors that have been on our show. We've had Casey Conway, and Hugh Kelly and Jim Costello. Well, please welcome another CRE counselor, Julie Melander. And she's the 2019 chair of the Board of Counselors of Real Estate. She's here in Studio One. Julie, thanks for being with us.
Thank you, Michael. I'm pleased to be here.
Well, I appreciate it. And you just came back from NARI and talked about these top 10 issues. And let's talk a little bit, before we get into them, about why you folks do this. I don't want to say you guys. It's not just guys,
no. Right? The females are a growing segment of the counselors, yes.
And of commercial real estate, and it's a good thing. So tell me, why do you do this, and how do you do it?
In 2012, our External Affairs Committee decided that they wanted to do something for the community. We do individually we do counseling for our clients, but as an organization, we were looking to provide something to the marketplace, to gather all the brilliant minds that are in the counselors and look at trends as an organization. So that committee has led our annual process of surveying all 1,100 members and leading a lively debate at our spring meetings and resurveying and then analyzing those results and coming up with the top 10 issues that our organization sees as a whole for the coming year.
I'd love to be at that debate when especially it comes down to the top 3, right? It must be great.
Yes, it's tough. We get some ideas out there that are generated early by the committee and by the board, and then they get flushed out and discussed. Yeah,
I mean, I've met so many CREs, and the caliber of people is just incredible. So that's one of the reasons I really look forward to this. All right, so we're going to go over the top 10, and we're going to start with number 10. We got to do it that right. So number 10 is public and private debt. How does that affect real estate?
Yes, well, as we see in the headlines, there's an abundant amount of capital in the marketplace these days. So our concern is that with all the capital that's out there and the historically low rates of interest, it's a sale, and borrowers are continuing to borrow. And we've seen May of this year, the consumer debt has risen to its highest level of $4.052 trillion is what we consumers now have as consumer debt. And we're concerned about that. It certainly impacts the homeowner's ability to buy a new house. And as interest rates go up, it's going to cause some additional concerns with household and business incomes, and incomes as those expenses rise.
And then public debt too?
Right. Certainly our federal level of public debt is the highest in the world. As a percent of the GDP, we're kind of in the middle. So we're not as bad as Japan, but not as good as Germany. It is of concern, certainly. And local and state liabilities are also a concern. That impacts city and state ability to fund infrastructure and take care of their citizens when you have the kind of unfunded liabilities that many of these city and states have for pension funds.
Yeah, it makes sense. All right, let's talk about number 9, volatility and confidence.
Well, yes, the basic finding here is that the more volatility in the marketplace, the less confidence that consumers, business owners, investors have to make a decision on investing. And while a lot of the measures in the marketplace are showing very high levels of confidence, there's volatility. The stock market and related measures of confidence have seen some real ups and downs over just the last 6 months.
Yeah.
So we're concerned with that.
Yeah. All right, number 8, population migration.
Yes, well, we discuss and debate a lot of the short-term issues. Certainly population migration is a long-term, sometimes generational trend. And this year we did hear from counselors that it's something that they have on their radar. It's something we need to all pay attention to, with cities like San Francisco struggling with the huge numbers of people that are heading that way and their homelessness issues and affordability issues, to those areas of our country like the Midwest and the Rust Belt and the rural South that are suffering from out-migration. What do we do?
Right. Mm-hmm. Yeah. So, yes, you got problems on both sides, right? Maybe too many people coming in one area. But in commercial real estate, it's hard to think, what do you mean too many people? We want traffic counts. We want population, right?
That's so true. That's so true. And it's more people means more demand. So, how can that be bad?
Yeah.
Yeah.
But it can be. All right, let's talk about number 7, capital market risk.
Yes, capital market risk is something that we think everybody needs to be paying attention to in our business. As I mentioned, we have record amounts of debt that are outstanding, and there's certainly additional capital in the debt markets to be deployed. The banks are competing now with unregulated debt funds where we've seen there's more and more competition, compressing yields, a little more aggressive underwriting in terms. So we say watch out for that. We're concerned. On the equity side, transactions are down, and what we see that telling us is that sellers have a certain view of the market and of values, and buyers perhaps aren't seeing it the same way. So there's more refinancings, there's more owners, sellers that are deciding to just hang on to their properties right now.
So if there's less transaction volume, does that mean that there's less capital market risk, or less chance of people maybe overpaying for some of these properties while they're on sale, while the debt market's on sale?
Well, if buyers are taking a breath and looking at their assumptions for future cash flows, which we think they should, and there are less transactions, yes, you'd think that, the prices aren't continuing to go up right now, so that could be a good sign that the market by itself is tempering.
Yeah, yeah, and it does that, and that's a good thing. On the broker side of things, it seems like it's more of the sellers that we talk to just feel real comfortable with the economy, and they seem to be real comfortable with what we have moving forward and the length of the cycle and the kind of the upside of their properties. And but maybe that's the broker. I mean, just always looking for more product to sell. Right?
Yeah. Well, you can't argue with where the stock market's at, and there are lots of very strong indicators out there. Yeah. Our counselors really are suggesting caution is warranted. Mm-hmm.
As always,
yellow
we
light.
Should also have some caution.
Mm-hmm.
All right, number 6, political division. What do you mean political? There's no divided political scene out there.
Yes. Well, the counselors is not an advocacy group. The membership and members of the counselors really span the whole political spectrum, for sure.
Yeah.
So what we're hearing from them is that really the divisiveness that's in politics today is making our options more limited. It's increasing the cost of solutions, and it's really costing us more and more of our competitive advantage around the world. So counselors as a whole are encouraging our legislators to come together and to compromise and to help get some bills passed and some legislation done that helps out the real estate industry.
Yeah, we got to get rid of gridlock, right, and the
Yes.
fighting. Yeah, no, it's amazing. We have two large screens in our cafe that is right outside our studio here, and one has CNN on it, and one has Fox News on it, and you can sit in the middle. And wait a minute, they're talking about the same thing, but both have totally different slants, and it's like there's so much division, and it seems like I can't believe either one of them. If you start watching one or the other, you start, I don't know, it's pretty confusing, and I agree with that one. Well, let's go to number 5, end of cycle economics. And I think a lot of people out there are kind of concerned, wow, these good times seem to be lasting forever, and isn't it time that something's supposed to happen?
Yes, yeah, we've been feeling that way for a while, haven't we? And I think the message is that while there are a lot of positive indicators, and certainly we have people looking at the market continuing to go a certain way, we're encouraging people to realize that there are plenty of signals that indicate that this could be the end of cycle. For instance, the transactions that are declining, they haven't taken a turn, big downturn, but the volume of transactions is declining, and so we're just encouraging the market participants not to look at the past and project forward. Look at signals, determine what's the right growth rate for rents. Recognize that you need to do some sensitivities on the interest rates, because certainly with the amount of debt that's out there, interest rates are going to have to increase at some point.
Yeah. Yeah, it's cyclical business for sure. But what do you say to the folks out there that say, you know what, there doesn't have to be a set time frame for a cycle anymore? It's kind of a different world, and does it really have to? Do we really have to cycle out of it? And if we do cycle out of it, obviously it's not going to be like the last down cycle, is it?
Nothing that I've heard in our counselor survey indicates that anyone expects a downturn like we had the last time. But there is some concern that as we slow and as tomorrow ends up not being quite like yesterday, that there may be some projects that got built, some purchases that were made that didn't use conservative enough analysis.
Yeah. Well, yeah, and we always want to be conservative, but it's interesting as we interview analysts and economists on this show focus on real estate. It seems like they're just quarter after quarter, year after year, just continually to be surprised at how well things are going. It seems like there's no end in sight. But there is end in sight to this segment. We're going to take a quick break, and we'll be right back, so stay with us. We're going to talk about number 4, 3, 2, and get to number 1. Stay with us. I'm Michael Bull. This is America's Commercial Real Estate Show.
America's Commercial Real Estate Show is brought to you by Bull Realty. For customized asset and occupancy solutions, visit bullrealty.com. Commercial Agent Success Strategies. Incredible training for commercial agents. Visit commercialagentsuccess.com. Red IQ. Turning multifamily data into actionable intelligence. Visit rediq.com.